And now, without any further delay, let's begin today's event, hosted by American Banker and sponsored by Feedzai. I'd like to introduce your moderator for today, and that is Mike Sisk. With that, Mike, the floor is yours.
Thanks so very much, Tanya, and I would like to welcome the audience once again. We are very grateful that you've chosen to share some of your busy day with us. We know that your time is valuable, and we will honor that today with what I'm confident will be an engaging 60 minutes or so of discussion. Once again, our topic today is prevent instant payments from becoming instant fraud losses. And my name is Mike Sisk. I will be your moderator today. I'm a contributing editor at American Banker, and my articles have also appeared in Barron's, Crane's New York Business, Inc., Institutional Investor, Strategy in Business, and Worth. And I am very pleased to introduce our three speakers today. First, Mary Ann Miller has been pioneering the use of artificial intelligence and machine learning in financial services for over 25 years. She is currently the head of fraud strategy at Varo, which combines mobile technology with a social mission to provide access to no-cost premium bank accounts and automated savings tools. Prior to joining Varo, Mary Ann was a senior director and fraud executive at NICE Actimize and has held directorships and executive roles in fraud strategy at USAA, eBay, PayPal, and Lloyd's Banking Group. We're very pleased to have Mary Ann with us here today. And joining her is Phong Rock. Phong has more than 25 years of experience in financial services, payments, and fintech with roles with Wells Fargo, JP Morgan Chase, Visa, MasterCard, OboPay, Accenture, and Experian. Phong joined Feedzai in 2015 and since then has helped to ramp up the company's expansion globally. Also very pleased to have Phong with us here today. And rounding things out, Brian Heffernan. Brian has over a decade of experience in the creation of predictive models and related products and services that leverage their outputs. His experience ranges across government, academia, and the private sector. He joined Feedzai 2 years ago and currently manages teams fighting fraud and money laundering for banks, merchants, and processors. And there you have it, our three speakers today. It's a great panel. It's a very interesting topic we've got with us today. And just before we jump into the real meat of the discussion, I just wanted to reiterate a couple quick housekeeping things that Tanya mentioned. First, we do have time at the end for Q&A. Usually we set aside 10 or 15 minutes. So you can put your question into the queue throughout the hour as it occurs to you. You don't have to wait until the end. So please, we encourage you to get those questions in there. If for some reason we don't get to a question that you asked today, sometimes we just run out of time. Sometimes it's just a question that's better addressed one-on-one. In any event, if we don't get to the questions you asked today, we will definitely follow up afterwards. So please ask away. We very much want to hear from you. And we also have, I think, 2 polls today. And I always encourage 100% participation. We do share the results live with everyone here, and it's a really nice way for everyone to see where other folks stand on the issue that we've come together today to discuss. So please weigh in on those if you can. And just a quick also note, you can download the slides from your console. They're in your resource button there at the bottom, so you can download those whenever you'd like, if you'd like them. And with that, I think I'm done with my little opening spiel. I will be back in a few moments to help with the polls, but right now I would like to officially turn things over to Mary Ann to really get the ball rolling. Mary Ann, the floor is yours.
Thank you, Mike. It's a pleasure to be here today with my partners at Feedzai and American Banker today, and I really embrace this topic of real-time payments. It's one of my favorite topics in fraud, and I look forward to our discussion today. Before we get started, let's just talk a little bit about, why did instant payments emerge, and really what was at the heart of that, initiative. And there's some technical components that certainly made instant payments possible around the world, like the standardization and adoption of new ISO standards. But it's really, really important to acknowledge the shift in customer expectations. And I like to think of the shift and the market shift and the expectation shift around increase in expectations and payments as the equivalent of what Amazon did for deliveries. So it wasn't that long ago, prior to Amazon's same-day deliveries, that customers really accepted the standard 3 to 5 business day delivery window offered by most businesses. But with the introduction of same-day deliveries, this really shifted the common practice, and more customers wanted immediate satisfaction. I know as a consumer, I really enjoy that. The same really holds true for transfers and payments. Most traditional wire transfers took anywhere from 1, even up to 3 business days to complete. Now, much like same-day deliveries, customers want and need and expect same-day payments. So that's really, I think, part of the crux of why globally the move to real-time payments really emerged. So what was that need, and why did the expectation really exist for consumers and customers? And it really was attributed to many things. And I think first, with our new way of engaging on social media and the way we engage online, there's really an emphasis on instant gratification. I know one thing that's really near and dear to my heart is the ease and the mind of knowing my money's been sent and received instantly. So that peace of mind. And there's really popularity of P2P apps, and the whole app experience is becoming more and more attractive to customers and easy. Your mobile's in your pocket. You can take your bank with you wherever you go. And then another aspect that I think is pretty interesting is our growing gig economy. So we really have a growing gig economy that's an interesting component of instant payments. It's clearly booming, and it's an important part of our workforce, with over 50% of the U.S. workforce projected to be good gig workers. With over 50% of gig workers soon to be a part of our economy. So that's really, there's a projection, I think, by 2027 that's going to be really a primary part of our workforce. For example, both Uber and Lyft saw the issue with attrition if they paid their employees on a typical bi-monthly model. Instead, they implemented their own instant payouts to drivers that help the retention of the gig workers. So, and also we have the rise of P2P apps. And worth noting that with the P2P apps, the experience was almost universal for the adoption with anyone who had a smartphone. So whether it's Zelle or Venmo or Varo P2P, customers now heavily rely on these platforms for facilitating their daily payments. So we always provided instant payouts like Venmo, but the parent company PayPal saw so Venmo did not provide instant payouts, but they saw that it was needed to create instant payouts for customers, so this feature was not initially provided through instant capabilities. I'm going to take a pause. We have a poll question.
Excellent. I'll jump in here, Marianne, and take our listeners through the first poll here. So everyone, what I'm going to do is I'm going to read the question and then read through the 4 possible answers, and I bet that most people have had a chance to make their selection by then. So the question is, in the next 6 months, do you have plans to offer instant payments to your customers? Say yes, or we already offer instant payments, not within the next 6 months, but we'd like to in the future, or no, we have no plans to support instant payments. Out that again, in 6 months, we have plans to offer instant. All right, that's probably enough time. Let me go ahead and share the results with everyone here. And okay, so things spread around. So about 36.7 said we already offer instant payments. 28.6 say that you do have plans, and another 21% say not within the next, but in the future. Marianne, let me just kick it over to you. I mean, are those sort of results that you expected to see, or any surprises here?
No, there's no surprises here. Zelle is very prominent in the industry, and we see a lot of other instant payments. But there's also several initiatives in the industry that are actually moving towards faster payments. So if you look at these numbers, you can see that the prevalence of moving towards quicker real-time payments is really a market trend. And if you think about almost 60% of the listeners today are moving towards that trend, and that's what we see in the industry. And instant payments, to that point, is really becoming a booming market. And we're only seeing more adoption of instant payouts, for example, going forward. The projected annual rate is over 30% between 2018 and 2025. So if you think about the gig workers and the fact that they need their payouts in a very quick way, that's going to continue to grow, and that's going to continue to be part of the infrastructure with banking and just in general with payments. Let's move on to what's happening with instant payments around the globe. And if you think about it, over a decade ago, there was faster payments in the UK, and they were really market leaders. And there's a new payments platform in Australia. Canada now has their Canada Payments Modernization, which really takes a look at providing real-time payments not only for retail customers, but commercial customers and actually at the Treasury level. And certainly we know with the current events, it would be great for in the U.S. if our Treasury had the ability to send real-time instant payments. In the U.S., we see initiatives with FedNow, which should be launching faster payments in the 2023-24 range. And the Clearinghouse actually has live customers today with instant payments. So we can see the adoption, again, globally, and we can see that to stay competitive, definitely banks and institutions are really moving to meet those customer expectations. So what are some of the really key considerations we look at the differences between payments and traditional transfers? And this is very important when we look at how payments are transferred, how payments are processed. First, unlike traditional transfers that are processed in batches, or instant payments are real-time. They're irrevocable, and they're very quick. Also, the funds are immediately available to the recipient, which is great if you're a consumer, but certainly something for us as fraud professionals to think about. Traditional transfers typically process money in days, again, but instant transfers allow the funds to be immediately available in the payee's account. And most importantly, there's no analyst time to review. So today, traditionally, you have the fraud analyst, and they're working their queues, or they're working their declines, and they're looking at, what should I stop, what should I hold, what should I allow to proceed, and this does not. You don't have that luxury with real-time payments. The transfers are made, the money is instant, and it needs to be scored in real time. And there's sometimes an underestimation of that whole end-to-end process of the need to have transaction monitoring, the need to interdict the payment. So if it's certainly a risky and high-risk event, you need to pause that event and really take some action. So that relationship between fraud and speed is definitely evident, and that's an important part in your strategy to make sure that you really look and fulfill that part of your strategy. What I'd like to talk about for just a moment, and kind of shifting thinking, but actually very, very related, is some factors in the environment and what can affect your fraud strategy, and especially if you have processes that are really affected by crisis. So we really have, with this particular crisis that we're all dealing with globally, some of the common fraud schemes and the impact of COVID. And unfortunately, whenever there are a global crisis, it's really not long before the fraudsters find out different ways to exploit people's vulnerabilities for their own benefit. So if we take a look at the numbers already, we see, and these are growing every day. I'm just astounded, and it's very heartbreaking. We see more clearly that 3% right now of all global spam is already estimated to be COVID-19 related. And there were over 7,000 COVID-19 scam complaints within the first 3 months of 2020 reported to the Federal Trade Commission. There's already been 4.6 million reported losses due to these COVID scams. So we can see that that fraudsters are definitely jumping on the vulnerabilities of consumers and customers during this very tough pandemic time. And there's several avenues that the fraudsters take and try to take advantage of the unsuspecting victims and their fear of the pandemic. So fraudsters pretend to be a fake charity and ask victims to donate to relief funds, so pandemic relief funds, scams around federal stimulus payments, where the fraudsters promise that they can grant access to payouts if the victims supply them with their banking information. Scams where fraudsters make promises to give people access to vaccines or medical treatment, and even scams where fraudsters impersonate family members and call loved ones asking them to help pay for their medical expenses. And those are the type of scams that really just, are really, really hard for family members, and especially if they're going through a really tough time already with this pandemic. Regardless of what the message is, fraudsters are tried and true, and they're going back to phishing scams and really exploit the current pandemic for their own financial gains. So what does that mean for instant payments? And so what do these increases in phishing attacks mean for instant payments, or an increase in phishing scams that lead to targeted payment scams? Specifically, they're looking at authorized push payment, or APP fraud, or account takeover fraud. In APP fraud, fraudsters trick the victim into transferring money into their own accounts. We often see this with romance scams, for example. This can take place when fraudsters claim to be a loved one who need help with medical payments. The victim would then transfer money to their account, to the fraudster's account, thinking that they were making a legitimate transfer to a loved one. And of course, most of us in the fraud community are very familiar with account takeover fraud, where fraudsters actually obtain the access to a person's bank account by logging on to their account details and transferring money from the victim's account and to their own account. This can really take place if the fraudsters tell the victim that they need their bank account login or their password information in order to process the stimulus payments. The fraudsters log on to the victim's account and transfer money to themselves. And another common occurrence in ATO is when the fraudsters set up mule accounts, link them through open banking, and then cash out through an external bank account. So as you can see, there's many ways that fraudsters, from push payment, social engineering, to actually account takeover, where the fraudsters really exploit the vulnerabilities of people that are either suffering in a crisis or are trying to manage through a crisis. And I think that's now, Mike, we can roll over to the next poll.
Excellent. Yes, it is time for our second poll of the program here, and everyone, this will be the kind of the same drill as the first one. I'm just going to read through the question and the 5 possible answers here. What are you most concerned about in regards to instant payments? Is it scoring transactions in real time, effectively scoring risk for new payment types, keeping up with evolving fraud patterns, not having a designated manual review stage, or decreasing customer friction? And the question there was, what are you most concerned about in regards to instant? About that, and then I'm going to return to Phong, who's going to go through his program here. Okay, let me share these results actually, and what we have is okay. So pretty clear winner here. 48.2% of you said keeping up with evolving fraud patterns. That was followed 25.4% of you said scoring transactions in real time. So those two account for about 75% of the responses here. Interesting. Thank you for those results. And Phong, let me just welcome you and ask, with these results, are these kind of what you expected to see, or any surprises?
Mike, thanks very much. You're absolutely right. But the fact is, no surprise here, but the fact is all of these are key concerns, and they're very valid in the way that we as bankers are looking to address our customers' needs, while at the same time trying to stem off the very vulnerable nature of what these types of payments can position us to do so. So, yeah, not very surprising at all. Thanks, Mike. So what I'd like to spend my time doing is to really speak towards how we as bankers can, in fact, combat instant payment fraud and really prevent these fraud losses from really ruining the customer experience and the value of what real-time payments, instant payments has to offer. Now, given the immediacy of instant payments coupled with this uncharted territory that we're all in this very extraordinary COVID times, the need for a comprehensive approach to fraud detection is more critical than ever. One, we know that payment landscape will always continue to evolve as channels and payment types are continuously introduced. Just look at Zelle, for example. A few years ago, it didn't even exist. Now it's a major payment channel that facilitates P2P and, with no surprise, is experiencing its own uptick in fraud activity. Then bring in the standardization and adoption of the ISO 20022 that Marianne spoke to earlier. We know that this will allow regions around the globe to adopt their own instant payment options and provide customers with that delight and also with that ability to address growing and evolving needs both on a P2P perspective as well as, of course, from a business perspective. And because of all of these changes and because of this continuous evolution, it would be naive to think that fraud will not continue to adapt and evolve right along with the payment landscape. So in order to adequately prepare for fraud targeted instant payments, FIs must take a comprehensive approach in their risk mitigation strategy and technology. First, the ability to make informed decisions faster while remaining agile to adjust, if not to predict, new fraud incursion is critical. This includes being able to develop and deploy a combination of rules and machine learning models into production quickly so that we can utilize streaming data and enrichment data. But it also means scoring transactions in line with authorization. And if a payment occurs in real time, the ability to score that transaction in real time. Next, it does also require advanced profiling capabilities. This means being able to look at a real-time and historical information of a transaction and measure specific behavior such as amount spent, a number of transactions, frequency of spend for each entity of that transaction. So the customer, the device involved, the ATM machine, the POS terminal, or even the time of day. And to do so, triangulated across a number of time windows. So considering it, how often these transactions have happened over the past 6 months, in the past 6 weeks, in the past 6 minutes, in the past 6 seconds. Having an understanding of normal behavior for every component of a transaction then helps you identify anomalous behavior much easier and more frequently. And so a true omni-channel approach is necessary. We hear omni-channel used a lot in payments, but having a complete view across all of your customers helps spot fraudulent activities that otherwise would be missed. So, for example, if you only have insight into your Zelle payments through one lens, card activity through another, and an ACH transfer through another, and you won't gain the insight that you need to understand what is truly genuine and fraudulent activities. It's not transferable across channels. So an omni-channel approach allows our banks to take learnings from one channel that otherwise would be kept siloed and apply them to this entire fraud prevention strategy. So remember, your credit card customer may also be your DDA or money market customer, a wealth management customer, a customer that might even be a small business account holder. A 360 view of this customer's activities, behaviors, and history offers you this tremendous insight to enable the best practice, the best possible service, I should say, to a client delight or highly effective risk mitigation. We speak about rules, we speak about machine learning. First, a beginning foundation of a fraud strategy usually involves rules. Rules are helpful and effective when you know what fraud you're looking to detect. For real-time payments, consider implementing rules that identify anomalies in instant payment behavior so that transactions can be flagged or rejected immediately depending on the bank's specific risk factors and strategies. So for example, there are rules that banks can put in place for fraud schemes that are often targeted at instant payments. Take authorized push payments, for example. Banks can implement rules to trigger such as the number of instant payments in the last 24 hours is 3 times greater than all the instant payments for the past 3 months. Well, that will trigger. Or a rule that triggers if a customer sends money to 3 or more new recipients within a 90-minute period, that would also trigger. And so these rules do help identify anomalies in instant behavior that can easily block transactions that fall outside of what is normal or genuine behavior, and saving the customers as well as the bank from becoming victims of these fraud schemes. So again, being able to know what fraud we're looking for and detect is a key part of what rules can bring value to. But we cannot stop there. We have to go beyond rules, and though they are functioning components of a strong fraud strategy, alone they become insufficient for even managing fraud across traditional payment types, let alone what we are facing today, real-time payments and instant payments. And it's more critical than ever to augment these rules with AI and machine learning so that we enable banks to prevent the fraud that they know what they're looking for, and even the fraud that they don't know what they're looking for. So a risk platform that is used both rules and machine learning will be necessary for banks to offer instant payments and really grow into this digital services world. You'll want a risk engine that can learn from what is suspicious, nefarious behavior, from what is good or even net new but good behavior. So as an example, let's say there isn't a rule deployed that specifically blocks a specific IP address, but there is an increase in fraudulent activities associated with this IP address over a short period of time. So even without a rule in place that says if this IP address block transaction, a good machine learning platform that combines with rules will identify that more and more fraudulent activities as being associated with this specific IP address and score transactions at a higher level because of this risk associated with the IP address. So all of these key tenets, from real-time scoring to augmenting rules with AI and machine learning to leveraging omni-channel data, are imperative in having this truly comprehensive fraud approach so we can block fraudulent activities for instant payments while not increasing friction for the genuine customer. You all shared in the first poll that 1/3 of you already offer real-time payments. And combined, 2/3 of this audience will offer real-time payments by the end of 2020. Allow me now then to transfer the mic over to Brian and have him really share some details of the effectiveness of an AI model recently deployed in a real-time payments case study. Brian?
Yep, thanks, Phong. So as Phong mentioned, the ability to move away from these rules-only solutions towards fraud solutions that can incorporate robust and highly performing models and deploy them into production with speed is really crucial to a comprehensive fraud approach. And the ability to reduce our cycle times not only allows us to be responsive to these constantly changing fraud patterns, as well as changes in normal or genuine behavior, which is especially important in our current COVID context, as Marianne touched on earlier, but it significantly reduces our operational costs as well. So as an example of how we're able to do all of this, here we're going to take a look at the performance of a model that we built to target fraud within real-time payments transactions. So what you're seeing here is a baseline model performance. It's a simple model built on the raw client data with no additional feature engineering or any additional layers of enrichment whatsoever. And here the y-axis represents the percentage of fraud money that's captured as a function of the percentage of routed or alerted transactions. So for instance, at a 2% alert rate, you can see that the baseline model captured just under 30% of the fraud money. And at a 4% alert rate, it captured roughly 40% of the fraud money. So from here, we leveraged Feedzai's automated machine learning, or AutoML, to help decrease the time required to build a model from what would typically take roughly 6 to 8 weeks down to just 2 days. So this is a huge time saver, and it works by automating a lot of the traditionally time-intensive data science tasks, such as feature engineering, feature selection, model building, tuning, evaluation, and so on. And this is something that can be easily configured by a data scientist during an afternoon. It simply requires some semantic tagging in order to map the input data fields to their meaning. So, for example, identifying a field as an amount or as a zip or an account ID, and so on. And then once that's done, they can kick off the job, head home, and come back the next day or maybe the following to a summary analysis of all the various iterations that were run, and more importantly, to the best performing feature set and model, both of which are surfaced and are there for them to work with going forward. I won't get into the details here, but under the hood, the semantic tagging allows AutoML to leverage Feedzai's deep domain knowledge by automatically creating and testing features that we know to be indicative of fraud. So here you can see that we got a substantial increase in model performance. So we captured an additional 23% of the fraud money compared to the baseline model. And this is all with a significant decrease in time to delivery, which is exactly what I'm looking for as a data scientist. Okay, so next we added some layers of data enrichment. So not only third-party integrations to glean things like device IDs or real IPs, but also data drawn from across additional business lines, as Phong mentioned. So here we know how a given customer behaves within the instant payments context, but what can we learn from their behavior as a checking account holder or a mortgage holder, et cetera. So we also make use here of Feedzai's common points of compromise, which allows us to incorporate additional contextual information about transactions in high-risk locations. So here, think zips, billing, shipping addresses, IPs, as well as high-risk entities like ATMs, POS terminals, and so on, based on the fraud patterns that we've been seeing across these various business lines. And this can give us a sense of accounts that have elevated risk. Okay, so in combining all these components and with some finishing touches from our data scientists, our final model was actually able to capture an additional 40% of the fraud money compared to that baseline model that we saw. And of course, being able to deploy a model into production expediently is really important given how quickly fraud moves. But being able to deploy a model into production that's able to capture that large of an increase in fraud money is even more impressive to me. And ultimately, being able to more confidently score transactions in real time allows us to reduce friction for customers, not only via the reduction of processing times, but also by reducing false positives. And all while effectively stopping instant payment fraud for our clients and their customers. And again, all of this is especially true in our present day COVID context, as we really want to be able to protect against fraud losses while ensuring that people are able to transfer money to their loved ones in a time of need, and that they're able to transact in a touchless fashion for their own health and safety. And with that, I'll hand it back over to Phong for some final takeaways.
Thanks, Brian. So in summary, we all know instant payments will continue to grow. They will not go away, and thus fraudsters will not go away. Instant payment continues to gain traction and popularity. It provides assurance and a customer delight for us customers. It will continue to grow and expand into the B2B world as well. And so being able to provide customers and instant payment options will continue to increase satisfaction, continue to increase revenue. That's key. But nonetheless, it does make our banks more susceptible to increased fraud attacks. So from phishing schemes that are targeted today from this very extraordinary coronavirus COVID time to increasing APP account takeover fraud, fraudsters will always look to ways to exploit the system. We know that. And thus payment processed in real time are even more vulnerable, as money can be moved into fraudsters' account instantly, and once a bell is rang, it cannot be unrang. So this does, in fact, require a bank to really look at how it can increase its security and its risk mitigation capabilities in real time. And so the world of real-time payments, it's critical that we're able to effectively assess risks in real time at the time of authorization, at the time of settlement, and as well as across the network of the bank, So throughout the risk management, it's critical to understand from a legitimacy point of view where these payments sit, how that is in context to the customer that you have in front of you, and the context of his or her accounts and relationships with the bank. And being able to do so, we believe that a comprehensive solution that includes machine learning rules, being able to understand and take bespoke data as well as enrichment of data, as well as, of course, taking a very real-time look at fraud strategy and understanding that fraud continues to change, and thus the ability to respond quickly, agilely, as well as then update your fraud rules, update your fraud models, and put them in production is going to be very key. And so being able to provide such solution, we feel is going to be one of the key ways that we as an industry will continue to keep our customers safe, our products strong, and at the same time, the fraudsters from staying away. Thank you all for joining us here. I'll hand it back to Mike now for Q&A.
Excellent. Thank you so much, Phong. And we, as promised, we've got some time here for some questions. So if you've got something on your mind, now would definitely be the time to get that question into the queue. But I see some good ones in here already, so I think we should just jump right in. So, Marianne, let me ask you first. As the director of fraud strategy at Lloyds Banking Group in London, when faster payments were rolled out, what was the biggest lesson learned from the rollout?
Well, Mike, that's actually a very good question. I have a couple of things that I'd like to point out. There was an underestimation, I think, from executives and leadership that there was actually a silver bullet to stop fraud for faster payments. So the team, when I joined the bank, had set aside funding for to hand fobs out to all of the retail bank customers, which I thought was quite probably cumbersome from a customer experience standpoint. So I think one of the first lessons learned was that there really was an underestimation of the relationship between fraud and speed. It really requires a comprehensive approach to identity, to authentication, and transaction monitoring. And back to Phong's earlier point, I took the approach of cross-channel. So the customer could make a payment in the telephone banking center, or they could make a payment by initiating it online, and they could also make a payment through the IVR. So all of those channels needed to be protected. I think that the other underestimation that we find in the market is, I worked with the bank in the past in a consulting capacity where they put in a great scoring model, but they weren't taking action on the score. So they weren't interdicting with those payments that were really high risk. So it's not only important to put in your machine learning model, but it's actually good to take action. So in other words, interdict, hold, or delay that payment, verify that with the customer, and then release the payment. I think from a standpoint of the way, the future, and the way that I'm thinking about a really good customer experience would be to really have real-time resolution. So if, and perhaps, your machine learning model looks and finds something that's anomalous or very high risk, that right inside the app, the customer can resolve the fact that this maybe if there's a false positive, the customer can respond in a safe way with checking identity, checking authentication passively, and then release that payment immediately to that payee. But of course, if it can't be authenticated and it is a fraudster, then as a bank, we can certainly protect ourselves. So that's really some of the really important aspects I've found over time where there was some underestimation and definitely some lessons learned.
Thank you. All right. Phong, I've got a question for you here. You mentioned ISO 222.
Yep.
Sorry.
The ISO 222.
Standardization for instant payments. What other payment schemes do you machine learning platforms support?
machine learning platforms can support a variety and must support a variety of payment schemas because fraudsters will find the most vulnerable product possible to perform their fraud. So our platforms and platforms within machine learnings should be able to connect through ISO 8583s to your international SWIFT messages, your other domestic settlement systems around the world for credit card transfers, your SEPA, CT ISOs, to just overall notches and ACH. So this is not necessarily a prohibitive of these types of solutions, but it is important to understand that different payment types do require connections and working with different payment schemas. And it happens just to be that the ISO 222s happen to be a very emerging payment schema today, given the growth of real-time payments and instant payments around the world.
Fantastic. Thank you, Phong. And let's loop Brian in here. Brian, can you speak to the AutoML configuration in more detail? You mentioned this semantic tagging process, but do all of the models simply use the same algorithm? How are the splits defined? How are features selected?
Sure. So AutoML can be run out of the box with its default settings, but it is highly configurable. So you can select from among various machine learning algorithms that you'd like to test out. So Feedzai's random forest, XGBoost, LightGBM. All of the really popular algorithms are there for you. You can also choose where you'd like to make your training, validation, and test set splits simply via the UI. Phong also spoke to our ability to create these hyper-granular profiles. We tend to take views of these across various time windows. So if we semantically tag maybe the account ID, for example, as a grouping entity, then AutoML allows us to define the windows that we'd like to aggregate over. So what that means is that we can choose to look at the average amount of money sent by a user, say, in a 3-month window or a 3-week window or a 3-day window. And that allows us to detect deviations in behavior. So this is extremely powerful for us. And you have control over how all of that gets done. But again, we have sensible defaults in place based on our significant experience here. As for the feature selection portion, that's done by computing feature importances and by then selecting from among the features that are identified as most strongly contributing to predictive performance. You can also configure things like business targets, hyperparameter tunings, and all that. And I could go on here, but basically we give you as much control as an experienced data scientist would want in order to configure the job. But anyone who understands the data well enough to simply map the input fields to their meaning can kick off a job and get a really solid feature set and performing model within a day or two.
Excellent. Thank you, Brian. And while I've got you talking, let me ask you another question here. Are you using any unsupervised models or just supervised?
Yeah, we do have some unsupervised models. I believe so. Our research department has been looking at that actively. Right now, we have isolation forest. That was the most performant algorithm that we saw. So we already have that, and I think on the product map we have a few other options coming. But typically with fraud, you really do. We know that a lot of customers don't necessarily have labels to begin with, but the supervised models do perform much better. So we might kickstart things using an unsupervised model like isolation forest, but we tend to want to move towards getting labeled data as quickly as possible.
And Brian, if I could just add to that too, unsupervised learning is becoming more of a trend. It's important, and they do provide some flexibility, in particular for nascent data use cases. With AutoML, but also with the requirement that most organizations will want, which is model governance. One of the key aspects is to, in fact, limit the unsupervised learning when we can, so that there is an understanding from a model governance standpoint what is in fact deployed and can be approved. But nonetheless, as you said, unsupervised models are are in place. They are working through many of our R&D work and some of our client sandbox work, but we are finding that the supervised models are going to be more effective than the unsupervised models at the time.
Excellent, excellent. Thank you both. All right. Let me ask this question of Marianne. Can you on a few instant pay evolving fraud patterns that you?
Yes, Mike, I certainly can. If you think about the instant gratification to customers, so there's also instant gratification to fraudsters. And what actually happens is when you start to begin to offer payments with, or even any kind of event with speed, that becomes a more, what's known in the banking industry, your attack rate goes up. So some of the types of attacks that we've seen is some of the classic ones for account takeover is certainly stolen credentials. So if you look at all the data breaches that have occurred and customer credentials and customers often, consumers in general, use the same password over and over, sometimes that is the key to get into your bank account. So we've seen the use of stolen credentials to actually then obtain access to bank accounts and then initiate a quick and speedy cash out through a faster payment method. For those banks that have been smart to add multi-factor authentication, but if that multi-factor authentication includes sending a one-time password to a phone, we've seen the fraudsters certainly run to the telcos and try to control once they have the credentials, become the recipient of the one-time password. So they SIM swap the phone, they port the phone service, or even redirect the SMS messages. So that's a way that they can control the authentication. So we've seen that as definitely an active pattern by the fraudsters. And then lastly, going back to APP push fraud, where banks have protected the OTP by having good detection in place if it's been SIM swapped reported, again, adding those layers, then we see the social engineering picking up. So there's often very smart social engineering where the fraudsters phish customers or send text messages to consumers and pretend to be the consumer's or the customer's bank, and then acting in a sense of urgency. You must update your password. Something has occurred. Let me help you. There's many, many forms of this, even clicking on links that take them to false websites. Those can be a combination of using social engineering with some pretty sophisticated attacks. But the fraudsters continue to be very they have a lot of innovation. They have their own innovation hubs, and they continue to evolve as expected.
Wonderful, wonderful. Thank you. Okay, everyone, thank you so many. Just so many good questions coming in here from the audience. Thank you. All right, next one here. Let me direct this one towards Phong. What is the time window you're looking at to deliver a risk assessment in time? Is it milliseconds?
I will assume that when we talk about time windows here, we're really talking about response time in terms of transaction scoring. Sometimes I think about time windows in terms of how we establish certain features within a machine learning model. So yes, it has to be real time, particularly for real-time payments. We typically will see 200 milliseconds or less, some as quick as 5 to 4 milliseconds. So those are key for these types of transactions and for these types of fraudulent use cases.
Gotcha. Okay, thank you. All right, next question here. Which authorization or authentication signals are considered most effective to indicate whether a user is fraudulent or not? And Brian, is that a question you can take, or I'll just throw it out to the all three? Please don't be shy, jump in.
Mike,
Marianne,
I can take this. Yeah, I can take that.
Marianne, thanks.
So, no problem. So when I think of authentication, I kind of go back to Fong's original kind of theme of omni-channel. So like you need to protect all omni-channel payments from a transaction monitoring standpoint, there's also an omni-channel aspect to authentication. So you look at your phone channel or your IVR channel, your mobile channel, your web channel. So some of the signals that you can see from an authentication standpoint that could indicate fraud is dependent on maybe some of the tools that you actually have in each one of these channels. For example, if you use a tool that actually indicates to you that the phone that's in concert with you, in session with you from a mobile standpoint, is the owner of the phone, there's solutions that will help you identify whether the owner of the phone and the possession of the phone and the phone is in session with the telco, will identify if that's true or false. So if that is false, then you know that there's something wrong with that particular interaction from an authentication standpoint. Another aspect is certainly if you use one-time passwords. If there's a failure of an OTP, and you know that that OTP and you have protected that OTP is not responded to, that can be another signal. Other types of signals, if you use solutions that let you know the reputation of that device that's interacting with you. In other words, you have consortium information that tags that device and that device has been involved in fraud before, that's where you can take authentication action and deny a login, for example. So there's other if we want to take a look outside of our mobile channel and our say web channel and look at telephone banking channel, there's actually signals for authentication that let you know if that particular phone call has been spoofed. So if there's any anti-spoofing occurring during that phone call. So those signals, and I think those are all important signals to send to your transaction monitoring system, again, as Brian alluded to and Phong, to write rules against, to include into your models even. Those are all important signals, especially in a real-time environment.
Great. Thank you so much, Marianne. And all right. Good. Another question here. We've got a couple more minutes at the top of the hour. We can probably get another question or two in. Phong, let me direct this one towards you. Are you able to use multiple non-financial data sources in detecting risk, for example, onboarding score, GPS, equipment ID, to create a blended score?
Yes, and in fact, a good platform for risk mitigation that utilizes AI and machine learning should also enable an orchestration of not just the streaming data that you get, typically the financial data, but also then reference data from third parties as well as we talked earlier, across the enterprise of your bank. And so we do enrich data that is going to show a lift within the actual score itself. So the blended score that you may consider may, in fact, invoke carrier data, device profiling and identity data, biometrics technology, as well, of course, things like the IP address, web session, screen scraping data. So there is a variety and a flexibility of actually taking in enhancement data or enrichment data to the actual streaming data for a transaction or an event, that event being an instant payment transaction as we're speaking to here, or an onboarding of a customer through the onboarding account system of the bank, or through a AML monitoring use case for which we would want to invoke sanctions list and other watch list. The point being that, yes, streaming data can be enriched, and so that you will have a blended score But the beautiful thing is that you're able to actually understand the value of each of these enhancements or enrichment data that is above and beyond your real-time streaming data, because it's going to either provide lift in the score and detection, or it won't. And so that's one of the aspects of what the machine learning platforms can provide, and it does provide the flexibility of taking in third-party data.
Fantastic. Okay. Beautiful. I think we've got time for one more question here. So let me loop in Marianne one final time here. Do banks communicate and share information with each other when they find fraudulent accounts or patterns?
So that's a really good question, Mike. I wish that there was actually more of this. When I was in a past role, I actually started something called the Collaborative Intelligence Sharing Forum, and often pulled together clients to share those types of patterns. There are, in the U.S., a couple of really great groups. I think EWS does a good job of pulling customers together and sharing fraud patterns. The Ariana Roundtable has done historically a good job in the card world of having great discussions around fraud patterns. And more recently, I've been attending the RMA, Risk Management Association, COVID-19 fraud calls, and they've been a very helpful forum to actually share some of the fraud trends that the banks are seeing. So there are some mechanisms for banks to share information. Again, that needs to get better. Globally, there's different types of groups that I was involved in actually in the UK and in other regions of the globe. So depending on where you're at in the world, there's certainly mechanisms to share recent trends and patterns.
All right, fantastic. And I think that is a very appropriate note to wind things up on. I would like, we always try to bring everything in on time, knowing that so many folks are rushing off to something else at the top of the hour. So first of all, let me thank Marianne, Phong, and Brian. It's been an excellent hour of discussion here. And thank you, everyone in the audience, of course, for being here, for asking all these great questions, for participating in these polls. Trust us when we say we would not want to do it without you. So appreciate your participation today. And also, please keep an eye out. We'll be sending you a follow-up email in the next day or two that will have a link to a recording of the event as well as the slides themselves. So if you haven't had a chance to download them now when you're sort of rushing off, we'll send you a link in the next day or two. You can do it then. And then you can review all this excellent material at your leisure in the future. And with that, I think I will wrap it up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.